A lot of news flowing into our grain and oilseed markets this week. We'll start with a little bit of the older news in regard to the prospective plantings report that was released on March 31st. Corn acres were a bit of a surprise, coming in at just over 95 million acres. Soybeans, we saw the little bit of the change there with regard to soybeans, right under 84 million acres, and wheat at 45 million acres. So that's kind of a summary of our three main crops. The big surprise there was corn acres, higher than what corn market analysts were expecting, and higher than even February's USDA Outlook Conference expectation. I've been speaking to in these reports as we've been coming through entering the spring planting season, how corn was trying to buy acres, and what we saw with that prospective plantings report, that is what is going to potentially be happening. Moving to some of the more recent news with respect to trade policies and tariffs. That has been quite a hot button, a talking point over the past few days. One of the biggest commodities that we're seeing impacted is soybeans. We do export quite a few soybeans to our Asian trading partners, primarily China. Overall, in years past, the norm is somewhere around 50% of our U.S. production is exported, and a big chunk of that does go to our Asian markets. It fluctuates between 40 and 60%, but again, on average, about 50% of our soybean production. And kind of the fallout from all of this news is that soybean prices have been under pressure of late. Ironically, a little bit is that corn and wheat are weathering the storm better than soybeans. Still not great, but better than soybeans. And the primary reason there is we don't export a lot of our corn, and then for our wheat exports, not nearly as impacted by our Asian trading partners. Corn and wheat to also highlight are protected through our USMCA trade agreement with Canada and Mexico. So that has been a little bit more of a relief on those two markets. But overall, there's just a lot of turmoil in the market. Very much, I would say, a good word to use here is a roller coaster. If you look at all of our primary row crop commodities, the markets have been up and down over the past couple of weeks. And I think it's important to keep in mind that in times like these, where information is flowing in so fast, and as market analysts and traders and grain market buyers and sellers are trying to navigate these waters, it can be quite challenging. And sometimes there's a lot of results that we're trying to draw conclusions and make forecasts about how these are going to be impactful. And there's just sometimes where we don't have all the answers. And I think it's important to understand that. And while we do want certainty and we do want these times to be more calm, these are times where we want to make sure that as farm managers and producers, that we're doing everything we can to control the things that we can control. And in closing, I think it's really good that we are, experiencing some wet weather and getting some soil moisture as we are leading into the tail end of our winter wheat crop and starting the spring with some soil moisture. So let's look to the bright side. Try to maintain as much calm in these rough waters and focus on all the things that you can control.